Welcome to our commercial, buy-to-let and short-term lending webinar, where I'm delighted to be joined by Matthew Taylor, Senior Business Development Manager from Interbay. So, who are Crystal Specialist Finance? We are a specialist finance distributor with over 80 lenders on panel across our 6 main business sectors. On there we include both exclusive and semi-exclusive products and lenders. We are 100% dedicated to the intermediary, including training, BDM visits and ongoing case management and case handling. And as you can see there, we are multi-award winning. We're a family-owned business with over 200 years collective specialist finance experience. And our motto, as you can see, is making specialist finance crystal clear. This is just an example of a couple of awards that we've won over the last few years. We're passionate about specialist finance, so what does that mean to you? First of all, you've placed your trust and your customers' trust in us, so it's up to us to talk to you to provide updates on your cases and not hide behind technology. Technology is a great facilitator and an enabler, but it shouldn't replace the need for specialist people. We know we're only as good as the last case we've dealt with for you, so we want you to send the next one. So it's up to us to assist and support you throughout the life of that case, and sometimes even beyond that where needed. Our flexibility means that we can find unique solutions for your customers, and our experience means that we have relationships with many lenders that no one else in the industry has. We aim to respond quickly and to complete your case in as short a time as possible. Our model is built around basically no win, no fee, so if we don't complete your client's case, we don't earn any money. So for us, it's about making sure we can deliver and that we can deliver in a timely manner. We're very big on education, so events like this today, where we try to provide you with updates on market trends, provide you with webinars, material, information from lenders, to make sure that you are one step ahead and that you can assist more and more customers when they come to see you. And specialist finance is a huge opportunity, let's not forget that. It can appear daunting, however, we'll assist you with your current case, but also help you to find new ones as well. Any fees will be discussed and agreed up front, so there are no hidden surprises for your client at the back end. And we're all human, so we are aware that cases will hit problems. It is the nature of specialist finance that it is tricky, it is difficult in certain circumstances. So it's up to us to proactively take action to seek to resolve the issue, to provide an alternative lending solution, or give you a heads up as early as possible that this is a deal we're unable to help with. Having said that we are people focused, for us internally the work is continuing on our technology proposition. It's up to us to provide market-leading specialist finance technology solutions. We use these as a way to deliver on our promises and to make our internal guys' job as easy and straightforward as possible. As you can see there, we've got over 200 years combined experience in the specialist finance sector. We don't do anything else. We don't do vanilla. We don't do insurance conveyancing or anything like that. For us, it's purely about the specialist finance market. We know our strengths. We stick to them. We do it well. So our strengths are in the specialist finance market. We know the true breadth and depth of products available. We understand each lender's appetite and we work closely with them to understand their processes to ensure we can get your deal done quickly and efficiently. So again, it's over to us to explain to you the process, timescales, what's required from you and your clients in order to get that completed. A few examples there of where we really do excel, things like adverse credit, low credit scores, tight completion deadlines, overseas borrowers, unusual property types, or where we have to consider all income sources. A quick overview for you on bridging finance. I know Matt will talk through Interbay's products and proposition a little bit later for you. We offer products from over 20 lenders within the marketplace. Loans range from 10,000 up to 30 million. There are lenders that offer desktop valuations, dual representation, no income verification. So there are various options there on the right hand side that you can see that can be available to your transaction. Rates, as you can see there, start from 0.42%. Rate isn't the be all and end all in bridging. It's all about the solution. Can the lender deliver? Can your client get the solution they're looking for? That said, rates now are dramatically low. They're nowhere near where they were a few years ago. Lenders offering rates of 0.42 seems ridiculous when we all started looking at this and it was 1.5, 1.75, etc. Loan to values go up to 75%. And again, depending on what's important to you and your client, there are things we can play with there, upfront fees, ELCs, etc., in order to make the whole proposition work. So bridging finance is something you'll have heard a lot of people talking about over the last few months. It continues to deliver funding for borrowers where traditional lenders may be more cautious or have restrictions. Especially in these changing times, the shifting sands of the market and the economy, clients may change their mind on what they want to do. Bridging loan books are currently around about 4.62 billion according to the ASTL, which is 14% up on where they were in 2019. Applications in quarter 2 were also 22.13 billion, which is a 9.7% increase on the same period. But you could use them for many different purposes. So the recent Mortgage Finance Gazette survey there showed that 25% of bridging loans were used to purchase an investment property, 18% chain break, 18% for business use, and then 39% there for various other purposes. So what that shows us is that bridging can be used for almost anything. Traditionally, people thought bridging was a product of last resort or a product to avoid where possible. But a quarter of bridging loans that were taken out during quarter two there were to purchase an investment property. It's an excellent way to either buy quickly, to take advantage of a low price or a quick purchase, or even to purchase a property that needs a bit of work, that you can do the work and then move it onto a more palatable term loan that the client can stay on. The other big USP for bridging is its speed and flexibility. So where you're looking at a chain break scenario or looking to exit development finance, you've got an auction with a 28-day deadline. You're looking to do refurbishments, either light to heavy, or you just need some cash quickly. Bridging is an ideal solution for those. So we aim to provide a quote to you within 4 hours if you're speaking to one of our underwriting team. So the next step is for the client to pay the valuation fee. Now, we collect this on application so we can move the case forward very quickly. However, there are certain circumstances where we can use a desktop valuation, sometimes called an AVM, which means that we don't need a valuation fee at all. This helps move cases along really quickly and that we can move to formal terms as quick as possible for your client. The next step obviously is to get solicitors working on it so we can instruct valuation and solicitors at the same time if needed, which can really speed up the application process. And then by using the documentation that we hold that we've provided to the lender and solicitor, then we can get funds released. Typically you're looking at 2 to 4 weeks. The quickest we've ever done is 1 day, and we've had cases that have dragged on for a year. It really depends on the client's circumstances and on what's needed. If you do need completion within 1 to 2 weeks, obviously that changes the lender set that we use. If it's a really complicated case, then that narrows the lender set down from there. If it's a really straightforward vanilla bridging loan that is just a downsize or something like that, then obviously all the lenders on panel are available. So our expertise really kicks in there in order to solve the problem. The lenders offering the lowest rates might have the tightest criteria. The lenders that are looser and will consider various different circumstances might be a touch more expensive, but it's all about getting that balance right and discussing it with you and your client in order to find the right solution for your client. Every case is different, and it does really need that personal approach in order to make them work. Bridging is obviously excellent for heavy refurbishments. So again, loans from 10,000 to 30 million. And lenders will offer dual representation, fast-track completions. We'll look at overseas borrowers and things like that. So anything light or heavy refurbishment is certainly worth a look for bridging. If it is more detailed than that, if you do need ground-up build or you're doing a full demolition and a rebuild, then our development finance team can step in and help you out with that as well. So that's why we really advocate the benefit of that call with an underwriter. There's certain things you can't put on an online application form. So for us, it's all about that personal interaction. Let's understand what you're looking to achieve. Let's understand the obstacles your client might be coming up against. And we still offer our Beat the Quote service. So because of the relationships we have, we like to think that we can't be beaten on bridging. So where it is an unregulated bridge, if you've got a quote from someone else, give us a shot. Let's see what we can do with it. If we can beat it, we will. If we can't, then we'll match it. So for us, it's about making sure that we can really deliver and add value to your proposition. For those of you that know of Crystal, you'll know that we are commercial finance experts. It's what we started doing many, many moons ago, and it's something that we continue to do today. So it doesn't just refer to a smoggy factory and cement building that's 20 stories or something like that. We can still do those, of course, but there are various use cases for commercial finance. Your retail unit, shop with flat above, maybe a warehouse or an MOT centre or something like that. Pubs, restaurants, hotels, any kind of property you can think of with a commercial usage, we will look at. Of course, you can refer a case to Crystal where it's non-regulated. We will take a client name and number off you and do the work from there. Keep you posted, keep you informed, and we'll pay you the same as if you were involved yourself. Really depends on your relationship with the borrower and how much you want to get involved with the transaction. Now, commercial is a little bit more complicated. Most residential lenders now have gone down the vanilla, almost tick box route, where if you meet certain requirements, you can have a loan. Commercial is a lot more different to that. It's more like old-fashioned banking, where the lender wants to understand the borrower, they want to understand the people behind the business, and really get to the bare bones of the transaction. So they will look at bank statements in more detail and want to understand the performance of the business over 3, 6, or even 12 months. If the applicant is running an existing business, they will want to see what income's been declared. Most lenders will also look for accounts, anything from 1 to 3 years, dependent on who you go to. The client will be asked to prove that they're solvent. Solicitors' process will take a bit longer. They are more complicated. A lot of the searches can't be indemnified against, whereas they can in residential. And the due diligence from the lender will be much more intensive. That said, we can still complete cases in 2, 3, 4 weeks if that needs to happen. It all depends on what the client needs to do and what's more important to them. The value of using Crystal is that we can help with those administrative headaches and the document chasing. I mean, it doesn't have to be a burden. It is complicated, we understand that, but let us take over that process. The comprehensive lender panel, full of great relationships and multi-award winning staff, we are well placed to help you complete more specialist commercial finance business. Another really innovative option that we can offer you are the homeowner business loans. So a client might want to raise capital for their business, but might not have the current level of equity necessary in the company assets. So one option, of course, is unsecured business finance, which is possible, dependent on the trading history and trading strength of the business. But we do have a loan available on the director's property. So 2 options there. We can either do second charge on the customer's home, as long as it's over 26,000 and for business use, then that is available to them. Or secondly, we can structure a loan to a limited company with the security address being the director's home address. And this is either done on a first or second charge basis, dependent on what's needed. So the benefits there, we can either do it as a loan to the director that he can then inject into the business, or we can do it as a loan direct to the business but secured on the director's properties. So again, it's all about that personal approach. It's about understanding what's best for the client and best for the transaction that you're looking at. So very quickly then, commercial finance rates from 3.15, we can go up to 80% loan to value. There are lenders considering adverse. Loan sizes can go up as high as you want them to. Obviously, the higher they go, the more difficult they become. You can have fixed rates available, terms up to 10 years. We've got owner occupied, we've got investment options there. Interest only still available from certain lenders. We can look at any borrowing entity, as long as the property's in the UK. Experience, nice but not essential. We can do low value properties, we can do projection-led income, and semi-commercial is a real boom area at the moment as well. So, specialist buy-to-let. Following on from the tax changes that were so heavily publicised over the last year or so, there is a continued shift towards the use of limited company vehicles, particularly for new purchases. And we're seeing, over the next couple of years now, we'll see this impact on the tax return of your professional landlords in much more detail. There are certain benefits of holding properties in limited company that don't exist to personal landlords. Now, we're not tax advisors, so it is very important that your clients do talk to a tax advisor on what's best for them, because what's best for client A isn't best for client B. So it is really important. We can't stress too much. We can't overstep the boundaries between providing mortgage advice and providing tax advice. So some research done recently by Foundation, a third of landlords are looking to remortgage within the next 12 months. And of those, 19% will do so within a limited company. 26% of portfolio landlords are more likely to remortgage within a limited company in the next year. So these are landlords with more than 11 properties. Now that you'll know from doing your standard buy-to-lets does push them outside the remit of a lot of buy-to-let lenders. Commercial really have embraced this sector. So rates are now extremely competitive with the standard buy-to-let market, and the process is becoming much more aligned as well. So if you have got clients that are looking to purchase properties, obviously you should be looking at referring them across to a tax advisor to see with the best structure to do that. And if they are looking to remortgage, then by all means pick the phone up to us. Let's see what's available. Let's have a look at the cost difference between the different options that they've got open to them. And again, look for the right solution to your client. It is that personal approach. It's about understanding what your client's looking for rather than it just being another loan that we're just going to put to another lender. Again, HMOs, excellent rental yield opportunities. We've seen a lot of conversion over the last couple of years from buying a typical investment property to converting that to a HMO. So what we're seeing there is that 40% of landlords that own standard terraced houses are looking to sell them. But by contrast, only 8% of landlords with HMOs plan to sell those. So there must be a reason that they're holding on to the better assets and selling off the ones that might not be making as much money. So 21% of landlords, according to Precise Mortgage's research there, are looking to add HMOs to their portfolio in 2019 to 2020. Typically 0.8% increase in rental yields over 2019. And normally landlords with 11 or more properties have got a more diverse portfolio with 3 different property types in there. And again, this is really good for the shifting sands of the economy. So if tenant appetite changes, or if customers want a different type of property to live in. If you only own one bed flats or studio flats, then it's very difficult for that landlord to keep a tenant within their portfolio. Whereas if you have multiple property types, you can quickly adapt to changes and to maybe even keep that tenant within your portfolio if you wanted to do that. So the specialist buy-to-let market, as you can see there, rates from under 2%, LTVs up to 85%, and limited companies accepted. Now, most lenders want SPVs or purely property companies. There are a number of lenders out there that will accept trading companies as well, so it's certainly worth picking up the phone and speaking to our guys about that. Again, HMOs are excellent. We can still consider adverse credit, consumer buy-to-let, vacant properties, and throughout England, Scotland and Wales. So a couple of case studies here for you just to bring those scenarios to life. So a broker approached us because he was let down by a mainstream bridging lender as the case was due to fund. Now this was mainly because it did have complex income issues. It was a second charge on the main residence for a lease extension, to put the money into a new business and to purchase a buy-to-let property. So on the day of, or very close to funding, the solicitors raised a number of questions to the lender. The lender then came back and said, we're not too comfortable with the deal, we want additional evidence of this, we want additional evidence of that. And the client just didn't have the time to wait in order to provide that to the lender. So the broker rang us in a bit of a panic and said, can we get this deal done? So we took the case over at 11, and using the existing valuation and a lot of the work that had already been done, we got this funded, close of play the same day. The broker earned the same commission as if the deal was done with lender A, with no additional fees charged. So it just shows the flexibility there. And pick up the phone, give us this scenario, warts and all. Let's fully understand the transaction. What we don't want to do is to find something out later that can then scupper the work that everyone's done on it. So let's have an open, upfront conversation. Let's fully understand what we're looking to achieve, and let's try and get that done for you. So commercial finance, we had a Monaco-based businessman, had a £5 million bridging loan on a property already, and he needed to do some refurbishment work on the property. So we managed to get that loan placed with Together, as you can see there. The client was an expat, asset owned by an offshore limited company. We worked with Together to approve the application. They obtained an offshore opinion on the structure of the LLC and provided the funds to the borrower within 15 days. Broker approached us there with a large portfolio with a complicated overseas structure. So in this one, the case was for a BVI registered limited company. 3 directors in Singapore looking to remortgage a £5 million portfolio to redeem various existing lenders. But the important part was that they also needed to pull out additional capital to buy more properties. Added to this, we needed to top slice the rental income in order to service the loan, as it was short of standard calculations. So we got this done, full loan amount, utilising a lender that took a commercial view on the rent, sourced offshore opinions to confirm the structure was all straightforward and above board, and we got this completed within 3 weeks of the application coming in. So specialist does mean tricky, it doesn't mean impossible. It doesn't necessarily mean long time scales or expensive either. So very quickly then, how it all works, contact us any way that works for you. Email, portal, phone, come and visit us, see us at any of the numerous events that we do across the year. The key there is to place an inquiry with our new business team. Let's have a conversation, let's understand what you're looking to achieve. The team here will then source the most competitive product and issue the most relevant terms to you. Once you receive that, you can discuss that with your client, get them to apply, complete the application forms, pay the valuation fee where appropriate, and get that case into us. Our processing team then take over the case and will handle every step of the way there and keep you informed. Key thing with us as well is that we also work with the solicitors to get the case fully completed and funded. We don't see our job ending when an offer is issued. For us, it's about getting that money released to the client to either put into their bank account or to pay off their existing loan. And again, as I mentioned at the very start, for us it's no win, no fee. So if we don't complete the transaction, if we get all the way through to legals and then there's a hiccup, we don't earn a penny. So for us it's about working through the problems, identifying where we can fix them, where we need to come back for further information, and really looking to add value to that transaction. And there's never been a better time to look at specialist finance. The market is changing constantly. Client demographics are changing. Products are changing. Property types are changing. And of course, lender processes are changing and adapting. So for a mortgage broker, it is a very tricky time. So therefore, pick up the phone, speak to the team at Crystal Specialist Finance, and let us really add value and help you with those more complicated cases. Well, that's me done. So thank you for listening to my part there. Gives me great pleasure now to hand over to Matthew from Interbay, who'll talk you through their proposition. Thanks, Matt.
Thank you, Kris, for that introduction. So my name is Matt Taylor, Senior Business Development Manager for Interbay Commercial. I'd like to introduce to you the Interbay proposition, discuss with you how we can assist you and your clients within the specialist mortgage market, and in particular today discuss commercial, buy-to-let and short-term lending. The areas I would like to cover in this short presentation are who are we, why are brokers looking at the specialist sector, our buy-to-let USPs, our commercial product offering, and our short-term lending proposition. So first of all, who are we? Interbay is part of the One Savings Bank or OSB family. Our other brands include Prestige, who offer second charge lending, Heritable Finance, who offer development finance, and possibly the most recognisable brand to mortgage intermediaries, Kent Reliance, that operate within the residential and specialist buy-to-let market too. We have a group balance sheet of over £9 billion. We were the first bank to float on the stock market in the last 10 years, and we joined the FTSE 250 in 2015. The common theme though throughout all of our brands is that brokers are our business. So why are brokers looking at the specialist sector? Having worked in this space for a number of years, it's quite simple to me. Clients do not have simple situations and simple circumstances that they're dealing with. They require specialist solutions from specialist intermediaries who have access to a number of different lenders throughout the marketplace. Historically, commercial, mixed-use or semi-commercial business would have been funded by high street banks, giving the clients the ability to obtain the best rates, and arguably this is still the starting point for commercial deals. However, low rates mean low risk, so banks are seeking LTV caps, sometimes around 55-60%. They're insisting on capital and interest, so repayments, mortgages over perhaps 15-20 years. And they're also not necessarily comfortable with different ownership structures in the background. In addition, perhaps sometimes wanting long leases with strong covenants in place as well. Interbay sit in a different space, whereby we're prepared to lend up to 75% loan to value of the vacant possession value on interest only. We can look at local tenants, we can look at vacant units in some instances. We're also seeing buy-to-let lenders gravitate towards commercial deals given the large amount of changes that have taken place in the buy-to-let market over the last few years, including second property taxation, PRA changes to portfolio lending, EPC changes and HMO licensing. All of which has seen growth in commercial investment and semi-commercial investment, which is probably the biggest area. So naturally, the changes that we've referred to in the buy-to-let market will push buy-to-let investors towards commercial property, semi-commercial property and HMOs in order to diversify their income, but also to obtain higher yields as part of an investment strategy. So as brokers, what opportunities exist? What patterns are we seeing in the property investment market? Institutional HMO and student developments, an underdevelopment sector in core UK cities. Investors are also seeking to move further north into the Midlands and the north of England to see greater returns on their investment. This can obviously limit the initial acquisition cost of property, but still return strong yields, especially with semi-commercial assets. But we're also seeing companies seeking high quality regional offices away from the capital, potentially as a result of Brexit. So in summary, larger HMOs, larger student developments, companies and individuals investing in commercial property and semi-commercial property away from the capital and the southeast of England that typically would have seen the strongest returns, or even a combination of both. The increased activity we're seeing in the semi-commercial market sees experienced landlords being familiar with the AST income that they would normally earn from a buy-to-let, with the added bonus and diversity of rental income. We're even seeing commercial property with HMOs above, again with the motivation of providing long-term income and a diverse income stream from the investment. So how can we assist clients who have commercial mortgage needs? So when is commercial funding required? As part of your relationship with your clients And when fact finding them, do you explore their commercial needs and their commercial finance requirements? As a broker, you will naturally come into contact with many self-employed people. Do you ask the question, do they rent their business premises? Do they have the aspirations to buy? Do they already own the property outright? Have they considered gearing up against this as part of a wider solution? Or who are they funded by at the moment? Are they funded by one of the high street banks who potentially has restricted their limitations in terms of borrowing? Or perhaps they're with a lender that maybe suited their circumstances at the time, but you're able to now offer them a better deal? Could your clients potentially look to refinance their existing commercial assets? Do they want to be provided with funds or gear up for further investment? As touched on earlier in the presentation, we've got the ability to potentially leverage more funds against these type of assets than the traditional high street banks could offer. Do your clients currently own commercial property and then now giving consideration to future tax planning or inheritance tax planning at all? Have they taken advice from a trusted accountant? And perhaps you need to allow them to gear up as part of the solution in order to meet certain requirements. Maybe they're looking to restructure and refinance the ownership of a property, and again we can help and assist with this. Has the client or the bank that funds them had a change in investment strategy? Does the client perhaps own their own commercial property that they previously traded from? They've subsequently moved out and have rented. This may not be an acceptable situation to their current finance provider, and they may need somebody like Interbay Commercial who's able to take quite a pragmatic view on this. I suppose the main theme is, though, if you don't ask, then you certainly won't get the business, and just look to fact find and probe, but know that there is a solution out there. So on to our commercial USPs. We are able to offer up to 75% loan to value, giving the clients the ability to borrow more than most traditional high street banks. Interest only is available, crucially for investors managing a property portfolio and owner-occupiers who need to keep a tight hold on cash flow. 125% debt service requirement. Again, more flexible than most high street lenders. So really we're giving the clients the opportunity to either gear up as much as they can against assets or equally put the minimum deposit down. We're able to accept multiple assets under one facility. So clients are able to come with us with a whole portfolio of property, and we can take an aggregated view on the loan to value and the rental income that the portfolio is receiving. We're able to consider vacant units, so provided the clients have the ability to demonstrate they've got cash flow in reserves, we're able to consider vacant units within a property. So let's assume that your client has acquired a property, some of the units are yet to be let and leases are yet to be executed. Providing the clients can demonstrate to us that they have cash in reserves to cover any initial void period, or the rest of the property is able to cover the mortgage borrowing, then we're able to proceed on that basis. We take a flexible approach to underwriting owner-occupier deals. So if your clients wish to buy their own commercial or semi-commercial premises to trade from, we're able to look at the client's EBITDA figure as well as take into account any rental income that the property may also be receiving. It's not uncommon these days for a client to purchase a property, maybe occupy one or two of the rooms or the units for their own trading purposes, but then let the others out in order to spread the risk. Again, this doesn't always sit well with the high street. And we're able to offer a conventional 30-year term on a mortgage. I said earlier in the presentation that some of the time high street will look to restrict the term of the borrowing in line with the lease that's in place, or maybe not be comfortable over more than a 15-20 year period. Again, here at Interbay Commercial, we're happy with a 30-year term, subject to age criteria and our normal underwriting. So as you can see, we provide a lot of solutions to commercial finance borrowing. As mentioned, we are part of the One Savings Bank group, and Kent Reliance are more associated with buy-to-let lending, I would suggest, than Interbay Commercial. But let's take a closer look at the differences and where we can take a more commercial view on buy-to-let investment. We have the ability to offer portfolio landlords one loan, one facility across the whole of their buy-to-let property portfolio. This comes in very useful when you're looking for an aggregated view across the portfolio based on rental coverage or indeed loan to value. We also get used quite a lot when clients are looking to incorporate the whole of their portfolio in one fell swoop. For the right professional landlord with a strong credit profile, we are also able to offer up to 85% loan to value. We have the ability to take a commercial view over complex ownership structures, lending to different types of limited company, including SPVs, trading companies, subsidiaries, SPVs owned by trusts, as we have a deep commercial understanding of the different structures available to investors. Whilst we have a minimum loan of $100,000 for buy-to-let loans, we have no upper maximum exposure limits. So exposure is considered on a case-by-case basis, and again ideal for portfolio landlords looking for one facility and one source of borrowing. As we mentioned earlier, we're seeing a definite shift towards HMOs and multi-unit blocks under one freehold, and these properties are returning greater yields than your average single-let buy-to-let. We have no limitations in terms of the number of rooms within a HMO, no limitations in terms of the number of units on one freehold, and we have the ability to consider blocks where units are not thought to be individually mortgageable. We can look at these on a single asset value basis. So if ever you've had a valuation report that's been returned with a nil value, maybe it's close to commercial premises, maybe it's under 30 square metres and the property isn't thought to be mortgageable on the open market, certainly look to consider a lender like Interbay Commercial that can look at it from an investment point of view and take that more pragmatic approach. And we can also lend to expat borrowers, subject to specific criteria. So our short-term funding proposition, more commonly known as bridging, a great tool in the bag of any advisor. The product gives clients short-term flexibility to acquire assets quickly before committing to long-term funding, or simply allows them to gain access to capital quickly in order to bridge the gap of a transaction. As a commercial lender, we operate in the unregulated bridging market. We're able to offer funding for auction purchases on both buy-to-let and commercial property, allowing clients to quickly acquire property within relevant timeframes. We have a developer exit proposition. If your client has finished a build and they're needing to repay expensive development finance, we can look to bridge to clear that finance, but allow them to gear up and capital raise in order to get going on the next project. We have a light, medium and heavy refurb proposition as well. We offer a light and medium refurb proposition, quite common in the buy-to-let market, allowing investors to acquire a property, make some necessary improvements in order to maximise either capital value of the property or to maximise the rental income that it can produce. Again, all geared towards a higher yield. If your clients are taking on more of a meatier project that requires planning permission, building consent, or the works are just a bit more rich, then we can also look at a heavy refurb proposition as well. We also offer short-term equity release. So if clients have unencumbered assets or quite lowly geared assets, this is a good way for them to obtain cash quite quickly. So as you can see, the rates on our bridging proposition are very competitive. Features include non-serviced interest, just a 2% arrangement fee, no exit and no ERCs to pay, and terms available between 1 and 18 months. Historically, it's always been perceived that bridging is quite an expensive option within the marketplace, but as competition has increased, this has driven costs down, and more investors now should be considering this as a viable option. So, things to consider. Now you're aware of how we can help. So what to look for? Certainly have a discussion and look to speak to portfolio landlords regarding their investment strategy. Are they thinking of diversifying? Have they considered commercial or semi-commercial? Have they considered looking at HMOs or multi-unit properties? If you're speaking to self-employed, where do they trade from? How do they fund it? Who do they bank with currently? And just take that more holistic approach and take your business to the next level. Things to consider: placing a deal, who and how. If you get a commercial lead at the moment, what do you do with it? Who do you pass that to? Are you happy with the response and the service that you're receiving? If not, simply contact Interbay, have a conversation with us, contact Crystal Specialist Finance, who are experts in the mortgage specialist mortgage market. But most importantly, do not miss out on an opportunity. Just simply pick up the phone. We've got an experienced sales team at the Interbay office who are only happy to help. and our BDMs can be located on our website www.interbay.co.uk. Thank you for your time. I hope you found this informative. I'll now hand you back over to Kris.
That concludes today's webinar. Thank you all for tuning in and listening. And remember, if you do have any cases you'd like to discuss, please give the guys a call, 01827 301070. I'm more than happy to discuss your needs with you. Thank you.